we're starting to get a bit of some optimism within the market, with the US oil opening down about 5% and coming down all the way down to 9% as of current. And the UK oil opened about 8%, and we're currently floating at around negative 13% down right there. So why is all this happening in the market, and what is the current status of my portfolio? So we did receive some news within the weekend whereby the US has actually taken a pause with Iran regards to the war, whereby they are now within a negotiating phase. And currently what that has done is that it has sent the market sort of like in an easing mode with regards to oil supply. And we do have hopes that traders rather do have hopes that there's a potential for the US war to actually come down to an end, whereby both parties actually are satisfied with the requirements of the other. All right, so now what is the current status of the trades that we have within the portfolio? So we did take a trade on silver. We actually were bullish on gold. We actually are bullish on gold, but by the time we wanted to take an entry on the market, gold actually didn't have a perfect entry with regards to our strategy. But what we did is that we found a proper entry within silver, and we took a trade from here. And we took one trade right around this area, right around the lows, not really the lows as such, but then around the close of the bearish candle of Thursday's candle. And then once one trade was taken down here, and another trade was taken right after the break of this daily candle. And of course right now we're in the red. I should post a screenshot right around here, and you should see that I'm down probably around $400 at the moment. Yeah, with one trade down about 350 and the other trade up about 150. So it's balancing itself out, but overall we're still very bullish on silver, and we do believe that this has a very huge potential to actually continue on moving higher. And the reason why this is so is because if you come into gold right here, we've actually started putting in some higher lows. So this is a higher low, which is right here, with regards to this low, which is right there. So there is a possibility that we can actually move up into these areas, but of course this is not fully confirmed. This is still a risky trade, we could say, because a fully confirmed trade will have to break at least above 4,200. So if prices manage to break above this and then move back down lower, this should be a more confirmed trade, because we will have confirmed using a change of character or a break of structure, as our ICT friends like to call it. And then possibly from here we're now going to start putting in some more higher highs and higher lows, going up into possibly the targets which we have set out with according to Goldman Sachs, I believe. If you watched my previous videos, we actually did a forecast with we actually reviewed a forecast that Goldman Sachs did on gold, whereby we estimated that gold has the potential to go up to 6,300 by the end of the year. So we're still looking into this, and this is still a very possible scenario. And of course we are in overall long term a very bullish trend with gold. And I guess one of the other things that we are closely taking a look at is the federal funds rate, which is scheduled for Wednesday, which is about US high impact federal funds rate in 47 hours. So that's in about 48 hours. It's just around 2 days from now. So we're just waiting on what that does. And you can just see within the scenario analysis that if actually is greater than forecast, so a rate hike would potentially strengthen the USD sharply across all pairs, as higher rates attract foreign capital and signals federal concerns about inflation and economic overheating. All right, so of course one of the things that we do have, one of the forecasts that we have on on the federal funds rate. We previously had a rate of 3.5%, and currently traders are estimating that there's a possibility that the rate is actually going to be maintained at the 3.5% rate. And this is actually potentially true, because if you just look at the trajectory of how the federal funds rate has been behaving within the past few months, we've settled perfectly at around 3.75%. And we believe that there's a possibility that that's going to be kept at the same rate right there. So what that will potentially do with regards to how the federal funds rate affects the market, if the federal funds rate is kept is kept at the same level, then this has a potential to move much higher. The reason why is because we could expect a possibility for rate cuts, possibly within the United States. And if rate cuts, I mean, we already have the speculation around a rate hike within the US. So we have the forecast of a rate hike, and keeping it at 3.5% is just the same as hiking the rate in the current moment. Of course, it means that the US is still properly yielding with regards to how traders expect it to yield at the current moment. So what that would do is that it will potentially strengthen the DXY as a capital influx goes into the US through purchase of bond within the bond market, or rather it's possible that we start dumping the federal funds rate since it's stationary at the same 3.5%. Of course, it's tricky how this could play out, but then ultimately, if the rate is the same, then we shouldn't expect much movement or much changes within how the market is going to react overall. But we do have speculations around a rate cut or a rate hike, and we're just going to see how that's going to play out in future. But of course, that's our forecast, and we've taken the side whereby we expect that this is going to stick around at 3.75%, I believe. Yeah, 3.75%. So that's that about our current stance within the market. And right, I also took a trade on oil. I believe that's going pretty all right. Of course, we did take a short. If you remember, we've been planning on shorting oil for the longest, and I believe we had plans on Friday that we were going to short around this area, but I've learned it the hard way not to short on Friday, because the amount of swap that I get on my account specifically is huge. So I don't take trades on a Friday and hoping to catch some moves on Monday like these. But of course, we did have the speculation that this was possible. One thing that you have to notice, of course, is that most of the issues regarding oil have been happening within the weekends. So anything with regards to negotiations, anything with regards to a ceasefire, the war reinstating, has been happening within the weekend, if you've noticed. And I believe Donald Trump is actually making a lot of money through such type of activity, because he can automatically predict that he's going to take the war to a ceasefire and place a trade with whatever means he has, place a trade short, and then the market jumps down, and then he makes like a couple of million of US dollars. So that's that. You usually notice that the market has been jumping within the weekends. So that can tell you that things have been happening within the weekend. So you can just see how many times we've been gapping within the weekends. All right, so that's all for this video, and yeah, I'll see you in the next one.